It's about the most frightening financial thing you can experience. Suddenly, your accounts show zero balance. Homeowners across the country were shocked to see thousands of dollars pulled from their accounts, and I was one of them, waking up Monday morning to find that Mr. Cooper Nation Star Mortgage had pulled a half dozen $1,500 payments from my account, payments totaling over $9,400, leaving me massively overdrawn.
Wow.
Self-destruct sequence activated. 3, 2, 1.
Is this your homework, Larry?
Just ask him about the car, man.
Is this yours, Larry? Is this your homework, Larry?
Is that your car out front?
Is this your homework, Larry?
We know it's his fucking homework. Where's the fucking money, you little brat?
Welcome back to the channel, everyone. Johnny here. I hope you're all having a wonderful Friday. Let's get right into today's episode. So, here we are again, the last Friday of the month, an important day for the price of Bitcoin every month, and similar to the correction we saw out of Bitcoin back in January, $4.2 billion worth of options open interest expired, and so far we're seeing this translate into some bullish price action out of Bitcoin. Now, a possible explanation for the immense selling pressure we've seen the entire month: expiry events tend to pressure price beforehand, but post-factum relief rallies differ considerably in strength, sometimes not appearing at all. Now, just days ago, Bitcoin was on its way to sealing its biggest April losses since 2015, in a stark contrast to the general trend of the past 12 years with the recent breakout. Bitcoin needs to climb above the $58,500 price level to confirm further bullish price action that will likely take Bitcoin all the way up to $63,000. Let's go ahead and take a deeper look at these charts. Looking at this price action heading into the weekend, two scenarios in the charts point towards the same resistance area near $58,500 as being a crucial price level that the bulls must break through to keep this rally going. Now, similar to where we were back in January, we could be looking at price action mirroring what we saw just a few months ago. Now, shout out to Trip for this chart. He's been eyeing this fractal possibility the entire month, and so far Bitcoin does seem to be following this idea. Now, it becomes a bit more apparent when we take a closer look at the price action. Now, here you can see as Bitcoin was headed towards the monthly settlement on January 29th, there was some volatility heading into the January settlement date that's very similar to what we've seen out of Bitcoin in the last few days. Now, while the similarities are undeniable, one possibly crucial difference would be the fact that when Bitcoin had this fake out to the downside on the 25th of April, the bears were able to push the price down far enough to post a lower swing low. Now, differing from the bearish fake out we saw on the 27th of January, where the quick sell-off was quickly bought right back up by the bulls and actually posted a higher low. Now, here on the daily chart, we can see a possible bullish AB equals CD forming with the point C just under the mentioned $58,500 key resistance area. Now, should we see a rejection here over the weekend, then we can expect prices to likely fall down near $40,000, a price area with a ton of confluence for a bounce and a potential full recovery back into the parabolic uptrend that began in October of last year. Now, should the bulls step in and push the price above this key resistance level, then we should expect the price to push into new all-time high territory as the measured move breakout of this inverse head and shoulders pattern is right at $63,000. Let's go ahead and take a look at some indicators. On the daily, we're not seeing a lot of bullishness out of the typical indicators. The MACD is showing some possible hidden bullish divergence as well as the RSI. However, we are seeing some bullish divergence, or more or less exaggerated bullish divergence, on the volume-weighted MACD. Now, this indicator weights its 12 and 26 period EMAs to the volume delta on the time frame you're viewing from, and has been pretty instrumental so far in helping find hints of where price action has been headed over the last few months. Now, if we zoom into the 4-hour chart, we could see some bullish divergence that has already played out, but yet again, what we're not seeing on the typical MACD and RSI, we are again seeing in the volume-weighted MACD. We have some pretty clear hidden bullish divergence, letting us know that this bullish price action is likely to continue. Now, we're also seeing a pretty clear uptrend in the on-balance volume, letting us know that volume and price action are both moving in tandem. Should we start seeing some divergence here, then we'll be ready to expect another drop in price before Bitcoin resumes its rally, possibly down to our point D of the potential bullish AB equals CD pattern, down just under $40,000. Again, a price level that is consistent with confirmed support as well as the 21 weekly EMA. Now, adding some bullish confluence to this idea would be the 10-year rate, confirming this parabolic uptrend and the overall bearish price action we are seeing out of the DXY. Now, the DXY broke bearish out of this giant diamond top pattern, and what we've seen in terms of bearish price action over the last few months could be considered the residual effects of a bearish retest and confirmation of this pattern. Now, with the Fed not looking to increase rates anytime soon, we're likely to see the 10-year rate continue to rise and the dollar to continue its bearish trajectory.
The U.S. dollar is almost certain to decline over the intermediate to long term. One of the things that drives the value of the U.S. dollar, it's very highly correlated to the value of the U.S. dollar, is the direction of the twin deficits of the United States. The budget deficit, which, as I pointed out earlier, is absolutely, the only word for it is exploding. It's at levels that just blow your mind.
Now, while these are not good signs for the health of the U.S. economy and financial system, they are incredibly bullish signs for the price of Bitcoin. So just to recap here, we are waiting on Bitcoin to move up and test this $58.5 thousand area over the weekend. Now, should the bulls step in and push the price above this price level, then we'll be looking at $63,000 as the first target in what should be a pretty sharp and bullish price movement. Now, should the bears step in and reject the price at this level, then we'll be looking for some buy orders to be filled down near the $40,000 level, right around the 21 weekly EMA, actually in between the 21 weekly EMA using the close and the 21 weekly EMA using the lows for the weekly candles. If you want to trade this price action, you can do so with us over on Bybit. And if you're interested in learning how to trade, we've put together one of the most comprehensive trading courses available, and we are currently looking for beta testers to try it out. Now, all beta testers will get 1 free month in the trading group where we post setups for Bitcoin, Ethereum, and a number of other altcoins. We'll be trading this price action, as we mentioned, over on Bybit. So if you're looking to get started and want to learn the ropes, go to the website 3candlecollective.com and submit your information today. We'll reach back out as soon as possible with instructions to go ahead and register as a beta tester for the group. While you're taking the course, you can watch our trades in real time from the members only channel. Now, I'm really looking forward to hearing from you guys, but that's all I have for you today. Thank you so much for dropping in and sticking with me until the end. Don't forget to like, don't forget to subscribe, and don't forget to join the free Telegram group. The link is in the description below, and I'll see you guys in the next video. Peace.